FX Fundamentals Manager Tony Nyman from Informa Global Markets in London is joining me now to discuss some of the most traded currency pairs. So Tony, let's start with one of the traders' favourite, the euro-dollar. Now we have reached 2012. Have your forecasts changed at all for this pair since we last spoke to you in December?
Well, we've actually lowered them a little, Rowena, just slightly to 128 in both the first 1 and the 3 months. 125 in the 6 months and 120 in the 12 months. The dollar has been the star performer in the first week of the new year. The simple reason is that nothing has changed since markets began to wind down on December the 23rd for the holiday period. Merkel and Sarkozy are scheduled to meet again on January the 9th, but few market participants expect anything concrete at all to emerge from that meeting. Certainly no cure-all to the ever-escalating EMU debt crisis. As a result, most of our forecasts at Informa are currently relatively dollar bullish. This week's results of the German and French auctions would conventionally be described as solid. However, solid is not good enough at the moment for the markets, and the euro has been sold pretty heavily again since. If possible, French downgrade talk has even intensified since yesterday's results, and together with fresh concerns over Europe's banks' capital strength, as well as increasing speculation of more near-term ECB interest rate cuts, it seems an obvious choice to stay bearish on the euro.
At the moment, the loonie is trading just above parity, but what are you expecting from dollar CAD in, say, 1 month, 6 months and 12 months' time?
We've got forecasts of 103, 106 and 108, and at the start of the year we've actually lowered ours a little from numbers such as 105, 107.50 and 110 in the 12 months. We're still relatively bullish on dollar CAD from obviously very relatively low levels, but we've lowered these forecasts, and the reasons, there have been no recent range breaks, but also we've been very impressed by the performance of the commodity block generally in the last few weeks, and the likes of the CAD obviously is part of the commodity block. We see the CAD being relatively buoyed by the firm oil price, a Bank of Canada which is steadfastly neutral in its monetary policy outlook compared to so many other more dovish central banks of the developed world, and the resilient economies on both sides of the Canadian and US border is acting as a prop for the CAD at the moment. And so we've seen a slight decoupling for the CAD from its usual traditional status as a risk currency. We're bullish dollar CAD, but as I say, we're fairly impressed by the loonie at the moment.
Okay, well, moving on to euro-yen then, I understand you're expecting this pair to trade in a fairly tight range.
We very much are. We see euro-yen 98.50 in the 1 month, in the 3 month 98.50, 98 in the 6, and just 97.20 in the 12 months. So we see very tight ranges. But we expect continued weakness here. And we're talking from historic lows we've seen again this week below 100 and towards 98 figure. We view, Informa views the euro-yen cross as a fairly good gauge of broader market sentiment. And we all know where sentiment is at the moment. It's very negative. However, we can't see much greater downside for a number of reasons. Our view at Informa centers on the fact that Japanese business is likely to be just as concerned with a sub-100 euro-yen as a sub-80 dollar-yen, for the obvious reason that big Japanese companies such as Sony, its biggest market is actually Europe, so the euro-yen is obviously a huge concern to the exporters. We think weakness to continue because of the landscape in the broader market of negativity, and the yen is a traditional safe haven asset, but we don't see any plunges there in the cross.
Thank you for that, Tony. Now join me next week when we'll discuss more of the latest currency projections from some of the biggest names in the financial industry. Goodbye for now.